Seek simplicity, but distrust it. Alfred North Whitehead. Always, you need to backtrack everything that you do in the charts each and every time you are looking to get into a trade. It is so important that you know the charts that you are following, that you are looking for trends that are established and have a record of doing so. So, yes, you seek simplicity, but you always distrust it. You're always looking for better, more accurate ways to do things. And you will find over and over again that trends on certain charts work until they don't. And when they don't work, you find another way. You drop that ETF or stock and you move on. You switch time frames. You do whatever you have to do. You keep it as simple as possible, but it has to work. The end goal is to make money in your practice trades, is to be successful, is to see green. That is exactly what we are seeking. Now let's jump into these charts. Stocks down a little bit for the day, bonds and gold up, Bitcoin taking a hit. So why don't we start with the S&P 500? We see that it is down a little less than, it's hard for me to see in the light. I am traveling today. Let me switch. There we go, 0.04. But look at what we see so far forming. We see a green up candle, price percent oscillators barely pulling away from the red signal line, derivative oscillators barely green, losing momentum there. And we go to the 2-day chart. Now again, when we look at the prior high, the high on the last full 2-day candle was 390.89. This candle on Wednesday, 392.28. So we are hitting a higher high so far. That is good to see. That's what we want to see as far as the high that is recorded there. And that's what we want to see and have happen. The price percent oscillator, like I said, moving away from the red signal line, derivative oscillator is moving up. And that is good. Now, again, we'll continue to watch, follow, and see how these things continue to develop. And again, that is the high during the day, not where things ended. Like I said, things ended down a little bit. We're looking at the Heikin Ashi candlesticks. If you guys don't understand Heikin Ashi candlesticks, they're not like your regular Japanese candlesticks, high open, low close, all the little patterns to memorize and all that. No, this is different. If you hadn't taken our training, going to put it at the end of today's video for you. About 180, 200,000 people. I'm not sure how high we are yet of the number of folks that have taken that training. It's the top one on the World Wide Web, so check it out. I want you to understand Heikin Ashi candlesticks. Very important. Help you see average pace. That's where we are on the first day of the 2-day. What do we see happening with the half day? Well, we talked about yesterday how we were getting right there close to breaking the trend line, and we saw that happen on the half day this morning and afternoon. So again, just a little potential warning there. We'll just pay attention. We still see that 2-day okay. Let's just see what these markets end up doing, and if we do through the course of the next 2 days, see that lead continuing to grow. Now we look at the Qs down 0.23%, but again, a green up candle, price percent oscillator, barely pulling away from the red signal line, derivative oscillator losing a little bit of momentum. First day of the latest 2-day candle, that's a cautionary candle. That is a red open box. It doesn't have a wick on the bottom or much of one. Nice wick on top. As far as the prior high, it was 334.81. The high here, 335. So we did hit a higher high, but that price percent oscillator flattening a little bit. Derivative oscillator still moving up. And that red open box candle on our Heikin Ashi candlesticks means a slowdown in the up movement. Price over price. So we look at the half day, and again, like the S&P, we see breaching that half-day trend line down in the morning, a little further down in the afternoon, really hit the highs and lows during the morning, and then sank in the afternoon. It was down, ended down 0.23%. Derivative oscillator losing momentum. Price percent oscillator hasn't crossed over yet, but it looks like it's getting close. So keep your eye on the Qs if you're in that practice up trade. Now we go to 20-year bonds. What do we see there? Well, the low last week, 148.02. The low this week, 148.04. So again, you'll see where it's sort of bottoming here. Up for the day, 0.67%. Derivative oscillator losing some downward momentum, as is the price percent oscillator, not going down at the same angle it had been last week. We go to the first day of the latest 2-day candle, and what do we see? Price percent oscillator still negative, but is moving up a little bit. Derivative oscillator negative, losing downward momentum. Green spinning top, a little one, almost a doji forming, but again, it's not a solid green. It's a little bit of an open box, so it's showing an attempt to move up. That's on the 2-day. We'll see how that finishes up on Thursday. Half-day chart, you can see, talking about that bottom, you can see where things hit the bottom back on Friday of last week and have been slowly etching up, crossed over, going up, I guess in the afternoons, what that looks like more than the morning. But again, 2 green up candles for the day. So that's where we are on bonds. Keep your eye on that if you're in that practice down trade there. So continue to watch and see where that is going. Now we leave bonds. We go to gold, up for the day, 0.39%. Again, gold is still sort of tracking along. It dropped strong that week ending the 15th of January, sideways the next 2 weeks, then dropped again last week, the week ending the 5th of February. This week so far, solid green spinning top, means indecision. Again, a slowdown in the down movement, but still that's counted as a down candle. Derivative oscillator, still gaining a little downward momentum. Price percent oscillator, not quite flat, heading down a little bit. So that's again what we can see there. We look at the 2-day chart now, going into the second green up candle, sitting right there on the weekly trend line, penetrated the 2-day trend line, first day of this latest candle. Derivative oscillator still negative, losing downward momentum. Price percent oscillator still negative, heading up. So we'll watch, pay attention to what we see there, what gold's actually doing. I keep waiting for gold to rally, go back up, but don't know how long that's going to take. We look at the half-day chart. Of course, it crossed over in the afternoon on Monday. It really hammered up on Monday morning. That was enough momentum to get that price percent oscillator and the derivative oscillator to cross over at the same time. And as we look where the high was on Tuesday afternoon at 173.03, 173.15. So again, for the last 2 days, hitting about the same point, still under that weekly trend line. So we'll keep our eye on things and see just where gold is going to go. I'm going to go ahead and redraw that half day since we had that crossover. Always good to update your trend lines when you can. Always try to connect 3 candles. Looks like I got about 4 connected there. More candles you connect on the trend line, the better the trend line. Okay, now we're going to leave gold. And lastly, let's touch on Bitcoin. What do we see Bitcoin doing? Well, let's start on the weekly. We can see where, of course, the week started off strong and has pushed up a little further above, as far as the candle goes, that 41,000 or so mark. Price percent oscillator had been flat, maybe heading down a little bit, is now trying to head up. Derivative oscillator still negative, down for the day 5.47%. 2-day chart, again, we saw things as they are crossing over. And again, trying to move up. We do have a green up candle. Did we reach a higher high? High we see 246. What do we have there? Yeah, it's just the same. So again, reaching the higher high over the last 2 days. The same high. So we do see that the derivative oscillator's flipping over and the price percent oscillator flipped over. So we do have that 2-day recross in effect. And we look at the half-day chart, we can see where things peaked and then sort of blowing that off. So those of you who are looking to jump into Bitcoin with that 2-day recross, if you're still looking to see if that's going to set itself up for you, again, look at the close of the market on Thursday, and see if you see a substantial pulling away on there. You can see on this half-day chart where things peaked and are rolling off a little bit. But when you look back on Bitcoin, you can see, of course, how it's done that, how it's pulled back some and then started up again. So you may see that occur. Again, it's nice to see Bitcoin starting to gain some more momentum, so pay attention. And again, let these charts lead you. Folks, that's where we are as we end the day on Wednesday. Thank you so much for being with us. Again, if you're not signed up for and receiving our daily market reviews, you're also not getting our daily trainings that we put out. The training today is on liquidity, a key to your success. Go to chartingwealth.com, put in your name, email address. We never spam or sell that list. We will send you our daily reviews every day in your email, plus you'll get those special daily trainings. Thanks for everyone who's purchased the book or is purchasing it. We appreciate all the Patreon support. God bless you guys. All the best from the whole team at Charting Wealth World Headquarters.